FNB. Now, we begin first with a look at the retail arm of FirstRand, and they aim to spend almost 2 billion rand in the next 12 months on expanding its entry-level banking network and its presence in Africa. Now, FirstRand, with a market cap of 134 billion rand, is looking to tap fast-growing African markets beyond South Africa. Anthony, let me start with you. FirstRand finally moving into Africa. Now, these are guys, of course, we know did make a tentative move into Africa, got banned, pulled back. Now they want to commit 2 billion rand of shareholders' money into Africa. Are they too late?
Godfrey, let me just take a step back and just give you a kind of a layman's, maybe an informed layman's opinion on the banking sector in South Africa.
Sure.
In a normal country, private sector saves, banks then take those deposits and lend to corporates. The corporates then invest in infrastructure and production capacity, employ people, create jobs, create growth. The country exports more than it imports.
Great.
Now that's an ideal scenario, and that's how most countries in the world operate. In South Africa, the inverse happens. Corporates save. You see today's Business Day headlines, 520 billion rand record corporate savings or cash on balance sheets. It's a record number. So corporates save. Banks then take those deposits and lend to consumers.
Right.
We import more than we export. We've got massive unemployment. We have to have a current account deficit that has to be financed by foreigners, hot speculative inflows into the country to finance this current account deficit.
I'm getting a drift of where you're going.
So that's really where we are at the moment in terms of the structural headwinds that the banking sector and the economy faces. Then to answer your question, yes, FirstRand is growing earnings well through a combination of taking more risk.
Yeah.
They are extending credit to unsecured lenders, consumers, and they're also doing very well in their West Bank division. So that's where the earnings growth is coming from.
But to be fair, they are not the only ones who are doing that.
Absolutely. The whole banking sector is extending credit to unsecured borrowers at a rapid rate. But we'll talk about that in more detail. Specifically with FirstRand, I think this is probably one of the best run banks of the South African banks in general. Whether it's too late into Africa, who knows? But Standard Bank is showing that it's very difficult to generate acceptable returns on equity out of its African operations. So there's a big question mark on whether the growth that has been priced into all South African banks in terms of the African prospects is achievable.
Paul? I saw you listen very carefully while Anthony was speaking here.
Yes, I quite like FirstRand. I think it is the best of our South African banks. And I used to say to people, you can't possibly invest in FSR, FirstRand, or RMB Holdings because it was a nasty mismatch of different stakes and cross holdings, and it's all been sorted out.
Right.
Although admittedly only recently. So they've gotten shot of momentum and all the other bits and pieces, outsurance and so on. So now what you've got is Rand Merchant Bank Holdings at the top owns 34% of FirstRand, but that's irrelevant because FirstRand is the entity which owns the whole of Rand Merchant Bank, the whole of First National Bank, and the whole of West Bank. So far, so good.
So it's much cleaner now for you.
Yes, and so you can now start to look at its earnings, and you can work out that it's on a 12 or 13 price to earnings ratio, and you can see what its return on equity is, and you can make a view of where it's going based not on whether they're going to reorganize further, but simply whether they're going to trade better. I like the CEO, Michael Jordan. I think he's a top chap, and I think he's going to do well for them. I think they're going to attract more deposits. So I think they are the...
You're talking the South African scenario here.
Yes.
Attracting more deposits in South Africa.
Yes, and that's the most important issue really for them. They're going to attract more business because money lending at the end of the day is a very profitable operation, and that's effectively what the banks do.
Sure.
They're clearly, because of the global financial crisis, de-risking, and they're taking out all of that equity trading and all that other rubbish that they used to do. The 7 guys from Seven Oaks that they used to laugh about, the private equity trading team, all of that stuff is going.
Right.
So I think there's an issue with profitability, and people are watching and waiting to see how the global banks are going to reposition themselves.
Yeah.
And I think the investors are beginning to warm up to them again. So I think you can consider this one. But, they're all fairly big and lumbering. Whether or not you're going to double your money on these shares in the short time, I think is questionable.
Are they too late in Africa?
Look, the African thing for First National Bank is tiny. It's only about 300 million in profits, which is compared to the 6.8 billion in profits. So it's very small, but I think they will do more there. The thing Anthony is referring to is that Standard Bank went in and capitalized branches in each and every country. They applied for a license.
Right.
And then the return on equity on that is quite low. But I think you have to take a long view on these things, and I think it's better that they're going into Africa than into other continents
But
around
of course,
the
there's
world.
the advantage of first mover. So you have to say that they are coming up against a well-entrenched entity in Standard Bank in Africa.
True.
And of course, all the other politics that we know bedevils are operating in Africa. We have to move on to hot or not for you. FirstRand?
For me, it's hot, and I think really simply I'm sort of taking a contrarian view that banks are finally beginning to come back into favor globally.
Anthony?
We don't like the sector per se. We prefer FirstRand out of all the banks, but we think that the potential return you get doesn't justify the risk. We think there's probably maybe 10% upside from here over a course of 12 months, and really there's much better opportunities elsewhere in the market.
I'm going to wait for the argument to come through that these are guys who are lending to people at record low interest rates. Yes, an indebted market, but at the same time, these interest rates are the lowest that we have seen in more than 3 decades. Some money has to be coming back.